Let's give a quick update on ZETA because this is a stock that I still think has the chance over the next 3 to 6 months to nearly double, moving its way up to $24 to $28. But the past couple of weeks have been very slow. Now, the first thing that we need to look at is market structure. If we take a look at the weekly chart, so this is a chart of basically the past 2 years, you're going to notice that market structure is still bullish. This is extremely important because we do not want to be buying stocks that have bearish market structure. Now, the way that we can tell that structure is bullish is if we take a draw tool from this low here at $7.24 up to this high at $38.20, and we come back to where this recent low is, we have not taken out the prior $7 level. We are, as of right now, bouncing to make a higher low. And this is important because most of the time when this occurs, we're normally going to see price action continue to bounce and make a higher high. Then from there, once price exhausts itself, most likely in April of 2026, we might see another pullback and this continuation will happen. Now, just because structure is bullish does not mean that we want to be buying all of these dips. For instance, we would not have bought this dip back here in November. We would not have bought this dip back here in January. What makes this so different now is that price is pulling deep into the institutional buy zone, and more importantly, into this purple area, which is the smart money zone. The way that we find these is by taking a Fibonacci retracement from the swing low up to that swing high that we already talked about and pulling it all the way out. Our courses, which are free, teach you exactly how to do this and the exact settings that we use for our Fibonacci's. Now, the smart money zone is so important because it's normally going to be the lowest that institutions will allow a stock to pull back to before they start buying it up. A good example of some of the recent trades that we've done with this is AMD, which since bouncing in the smart money zone is now up about 106%. Robinhood, which since bouncing in the smart money zone is now up about 200%. Roblox, which since bouncing in the smart money zone is now up about 148%. But there are times, such as NVO recently, where the smart money zone just doesn't hold. And that's why, even though we absolutely kill it, our win rate is not 100%. So there's definitely a chance that ZETA could reject through the smart money zone, completely sell off. And a lot of that is going to really come down to earnings coming up here on Tuesday, August 5th. As of right now, I have a feeling that earnings should be strong. We're seeing a hold on the smart money zone. We're seeing institutional buying pressure coming in on the BX trender, which is showing bright green. Real quick, if you like these chart breakdown videos and you want to learn the exact strategy that I use, I put together a free masterclass series that shows you step-by-step how we trade these smart money zones and BX trenders. It's completely free and you get access to all of our indicators as well. The link will be in the description. And more importantly, if we zoom out to this monthly chart, we're actually switching from dark light red. The last time that this happened, the last time we showed massive institutional buy pressure on a monthly chart, the stock ran nearly 264% within 335 days. So in my opinion, I think the risk versus reward ratio to take this trade is more than worth it. And even if ZETA ends up cratering and I lose 30% on this, my upside is minimum 100% to best case 160%. And I will take that risk versus reward ratio each and every single day. I've seen a lot of people who are getting worried too about how we've been compressing and selling off. But the same idea that we just talked about is happening on the smaller timeframes as it is on the bigger timeframes. For instance, structure is actually bullish now. You can see that we went from making lower highs to lower lows to now making higher lows and higher highs. This is exactly what we want to see. This means that price action will continue to run. If we were to take out this $12 level, that's when I would be more concerned and think the price might start to sell off and we would have to remove our position. But the fact that every time we pull back into a smart money zone, we go for a massive parabolic run is a very good sign. So as of right now, I'm holding on to my position. I still think that we're going to continue to rally. My outlook here is still strong, and we'll see what ends up happening.